Okay, well, thanks
Okay.
for joining us, everyone. Welcome. And so people will just be trickling in, I guess. I guess it's bad weather, so it's hard to get hard to get here. Um, but yeah, we're excited to have you guys here. We're going to do a quick introduction of who we are and how we can help you. So I'll let Corey take it away.
Okay, I just want to welcome you and thank you for joining our first ever Zoom virtual home buying seminar. I'm Corey Kugler and this is Sarah Kugler, and we are the Kugler team with Realty. Just to give you a little bit of background about ourselves, I've been in business in the real estate industry since 2003, so that's 18 years now, and Tara's been in since 2012, I think.
Yeah. 2012, so licensed for 9 years.
Yep, so that's years. So and we became a mother-daughter team this past year. We decided to our resources and our different skill sets. So, and we're very, very happy we did. So in our years of business, we've seen all kinds of markets in real estate. We've seen buyer's market, we've seen balance market, and now, as most of you probably know, we are in what's called the seller's market, and it is crazy hot seller's market. So very important for you guys to get some good information. We're also very passionate about supporting our local community, and that's very, very important to us. Not just in our own neighborhood, but throughout all of Ottawa and the surrounding areas. So yeah, Tara will probably have some things to say, and then we can get started.
Well, let Jerry, you want to introduce yourself and tell us a little bit about yourself and how long you've been in the biz for?
Yeah.
Yep. My name is Jerry Schindelheim. I'm a mortgage agent with Invis, also known as the kayaking mortgage broker. I've been working as a mortgage broker for over 12 years, and my company financed over $50 billion of mortgages last year alone.
Wow.
Wow.
Awesome, Jerry. Okay, so so basically we want to take you shopping. We can't wait to take you out house hunting, but first things first, you have to be pre-approved. So that's so important. It's always been important to be pre-approved before you start shopping for a home, but now more than ever in this market, you need to know your spending power. You need to know how much you can afford. The market is so competitive right now that we don't have time to even waste. You don't have time to think. You need to know what you can afford. So what we've done is compiled a list of most frequently asked questions and topics that we get from our first-time homebuyers. And we're going to share that with you today. We're going to ask Jerry these questions, and we hope that you can take away like a nugget just for you that's going to apply to your personal situation that you'll find helpful. Also, so you're all muted right now, which is great. But so as we're going back and forth with Jerry and you need clarification, please unmute yourself. Please feel free to ask questions. This is very casual. Yeah, so please have some dialogue with us if you don't understand what we're saying or just need some extra help. At the end of the workshop, you can unmute yourself again if you have another question more specific to your scenario. We can try and answer that for you. And if we run out of time, of course, please feel free to email us after this workshop and we'd be happy to answer your questions directly. So let's get started. Yep. Jerry, are you ready?
Yep.
Hot seat's yours.
Okay. The first question is, can you please explain to us the difference between a pre-qualification and a pre-approval?
So everybody interchanges the two, pre-approvals and pre-qualifications. The main thing, what you want to do was, if you're about to get pre-approved, you want to make sure that whoever is working on the mortgage will ask you for documentation. Most lenders or personal bankers, they will just ask you, give me the information, tell me about your employment, tell me about your income, tell me about your down payment, and then they put it into the computer system and give you a number. Okay. I don't work that way. I want to verify your paperwork to make sure everything is good. So I pre-qualify you. I ask for letter of employments. I want to make sure how the letter of employment is written. Some people will just say you're making $52,000 per year, but it could be $30,000 plus commission. I want to look at all the details to find out how you qualify for it. Down payment, I want to look at 3 months of down payment. So where is it coming from? Is it coming from a gift? If it's coming from a family member, if it's coming from a loan, a credit card, I ask for information. A lot of the bankers don't ask for anything. They just say how much you have for down payment. So I want to go through a lot more details. So what I do is I'm a detective. whatever information you give, I want to verify everything you give me so I can make sure it is right and you are ready to go buy a home.
Cool. So Jerry, so that brings me to, what would you say the benefits are of working with a mortgage agent or a mortgage broker such as yourself versus going to your local bank, your traditional bank, and just going to see the person that works on mortgages in a bank setting? What are the advantages?
The difference between a bank and myself, they only have one product. So if you don't fit into their box, you're not going to be approved. I have so many different type of clients who don't qualify at the banks because of different employment situations, where the down payment is coming from, if the income is coming from overseas, all different types. Banks only like one type of client, and it's easier for them to do one thing. I can be unique and get things done that the banks can't do.
Like you're being, just off top of it, you're being very creative. You have all these different creative ways to get people approved, essentially, which
Yes.
banks do.
Yeah, so especially for people who are self-employed, they're making great income, but they're writing a lot of expenses down.
You're answering one of our questions that we have for later, Jerry.
Stop.
Yeah, so we have a lot more access to different type of products than the banks do. That's the main.
Okay, perfect. Okay, so what are the things buyers require when applying for a mortgage?
They require hopefully a down payment and a job. So the main things, you want to make sure that they are employed, that they're not on probation, that they have the down payment saved up, that they're not only just saving it now, but it's already saved up, and that they have their credit is established is a very important part.
And what kind of down payment are you looking at typically?
Down payment could be anything, minimum 5% down payment. If you just graduate from school and you don't have the down payment saved up, I have some lenders who allow you to borrow the down payment. Okay. But it's only good for people who have good incomes, no debt, and a great credit score.
Okay.
So you were talking before about self-employment. So you're saying that if you are self-employed, it's still possible to qualify for a mortgage?
Definitely.
And how does that differ than, traditional, you get a paycheck, every 7 or 14 days?
So it depends what type of a self-employed are you. So are you self-employed? You're just a regular self-employed? Do you own a corporation? We have to look at different things. But self-employed people are making great income. So their line 150 on their taxes or the gross income is quite high. But because they are allowed writing off their expenses, their net income is very low. And the banks will look at the past 2 years of their net income. I can have access to lenders who can look at 6 months of bank statements and determine what the real income is.
Okay.
So we have a lot more features than the banks do.
Cool. Great. So people who are wanting to get pre-approved, they're not, don't immediately qualify. What are the types of disqualifiers that people should avoid when trying to get pre-approved?
Your sound is not too clear right now.
Oh, sorry, Jerry. So what can people who don't immediately qualify do to improve their situation? And what types of things are disqualifiers?
Okay, so one of the biggest issues, what I'm seeing a lot right now, is credit. There's a lot of people who have credit issues. They're paying their bills properly, but the way credit scores are being used are different from what people expect. If you pay your bills on time, you have a good credit score normally. But also if you have a big limit and your balance is so close to your limit, that is affecting your credit score. So you will normally want to have 50% of your limit or your balance owing. You don't want to have your limit and balance too close together. You want to have a big spread, about 50%. That's the biggest issue. It's better to have 5 different credit cards or 3 different credit cards with a small balance than one with 0 and another 100% used.
Okay.
So you want to make sure you take care of that. And that takes usually time to fix up. It takes sometimes about 3 months for Equifax or the TransUnion to start reporting it, because not all companies report to Equifax right away. So it depends on their billing cycle. So it might take 3 months just to fix up something like adjusting imbalances.
Okay.
Okay, so talking about credit scores, so when you're talking about credit scores, what is an acceptable credit score? Like, there's a numeric scale, right? So what would you need to fall
The best
into?
score, yeah. So the best score is 900. We call them unicorns. Basically, almost no one has those.
Right.
So credit scores can be a massive range. So the typical credit score that the banks look at is around 680. You have a 680 plus, we can do amazing things for you. But if you don't have a 680, we still can do a lot of amazing things for you. I have clients who have under 500 credit score. I still can get them approved. There are ways to get things approved with low credit scores. You might need a much bigger down payment to get it qualified, but we do have access. Having a low credit score will not stop you from buying a home. It will just change the type of lenders we use.
Okay. Yeah, that's interesting. So what are the current mortgage rates on a 5-year fixed mortgage? And what is a stress test?
Okay, so the typical mortgages, that's very hard to say because it all depends on how much down payment somebody puts down. So typical people put down under 20%, they get a certain rate. If they put 20% down, normally the rate will be a little higher because the bank is not protected in case you default. So if you put less than 20% down, the banks are not protected, so we can offer better rates.
Oh, interesting.
And the stress test is basically, pardon me?
Oh, I was going to say, so protected, you mean like
By CMH.
If you can't pay your bills and something happens because you lost your job or something else, the banks are protected for a default. So
Okay.
that's why they're able to offer you a better rate because they are protected.
Got you. Just taking some notes here too.
Yeah.
And can you explain the stress test to everyone?
Yeah, so basically what the government did is basically they want to stress everybody's applications to make sure they don't overspend because we don't know what the rates will be in the next 5 years, 10 years. So they want to make sure that they qualify you. And right now the stress test is at 4.79%. So if I'm working on a pre-approval for you, I offer you an amazing rate of mid ones. I still will stress test you at 4.79% to make sure you guys can qualify.
So in other words, this protects.
Pardon me?
So that protects you. So if the rates go up, you're not just going to have to default on your home.
Yeah. So say somebody's going to you today to shop for a home, and the rates right now they've got pre-approved with say 1.6, 1.7, whatever rates. And the next 3 months, 4 months, they're shopping. They continue shopping for another 8 months. The stress test has not changed. They still qualify. Their rate, their pay might change, but the qualification for shopping is still the same at 4.79.
Oh, okay.
Okay, that's good to know.
Okay. So here's a question. So there's different types of mortgage. There's different types of mortgages. So what's the difference between a fixed mortgage and a variable rate mortgage? And is one better than the other? And why would people choose one over the other?
So it depends on what their client's situation is. Variable and fixed. Variable is much preferred because we know what the penalty is. So if you break a mortgage with a variable, we basically know there's 3 months of interest. So if somebody is going to buy a home and they think they're going to sell it in 3 years, or some situation they're going to change jobs, they want to move, they know what their penalty is right away.
Oh.
So if you take a fixed rate, we don't know what the penalty is. Depends on how much discount they got, and originally what rate then they were able to negotiate. It's basically the spread between what they got and the new rate they're going to get when they break the mortgage.
So I guess one's not better than the other. It's just your situation or.
The penalties are a lot higher. The penalties are unknown right now because we don't know what the rate we're going to compare the mortgage when they break the mortgage. So there's a lot of unknowns. Right now, I have clients with a $5,000 penalty. I have clients with a $14,000 penalty, $35,000 penalty because they broke their mortgage at a certain time period. Could be 3 months, it could be 9 months, 5 years, 4 years. We don't know. So we don't know what the penalty would be because we don't know what the rates are then and how much the spread is. There's a lot more complicated math, but that's a simple answer.
Typically, though, what do you usually would recommend for them?
I don't recommend anything to my clients. I just basically advise them and saying, this is what the situation is based on your income. And I ask them a lot of questions to find out what are their plans, what are they going to do? Are they going to maybe renovate their home? Is this a starter home? Is there going to be, say, a roof that needs to be repaired in a couple of years? Do they need cash? So I ask a lot of questions to find out what the best item is, if it's variable or fixed. Most people are taking fixed because that's what their parents took. Does not mean it's the best product for them. Everybody's taking fixed for one reason. Again, it's because their parents took it and their parents took that. Does not mean it's the best product.
And so buyers are approved to say, and they're shopping and they see condominiums versus freeholds, and condos are coming up. They're less expensive, obviously. You can get a condo, just say, for $350,000 when a freehold is $500,000. So you think, yes, I can get this. It's under $400,000. It's $350,000. This is great. But what are the mistakes that people make when thinking they can afford a condo? What do they have to keep in mind?
Yeah, so we have to look at the condo fees, because houses have no condo fees. We calculate, we know what the payment is, what the purchase price is. We look at the property taxes. With condos, we look at the same thing, plus we look at what the condo fees are. But condo fees could go up, depends on if there's special situations, that assessments they need. So condo fees, we still have to always look at 50% of the condo fees in doing our calculation. And that takes a lot of the purchasing power away, because now you have another expense that homeowners would not have.
Okay, so that's just something to look out for too, is when you're looking, they're not comparing apples to apples. Condos have a lot of other expenses attached to it. So they are actually a little bit more expensive than what you're actually seeing with the purchase price. You have to add in condo fees and whatnot. So that's good.
Right. The purchase price will be cheaper, but your expenses might be a little higher. So you might be able to buy a home for $400 on a condo, but $500 for a standalone home.
Okay.
Because all the numbers. And you can see condo fees from $100 per month to $600, $700 a month, depends on where you buy it.
Right. Yeah. Right. And also, that's not written down here, but maybe we can discuss, just current events is in CERB, people who have gone on to CERB and things like that. How did that affect, they were, maybe eligible last year when they were still employed. Now they're on CERB. They're still making, $40,000 a year, but it's, CERB payments. How does that?
Yeah, so right now, a lot of our lenders don't like anything with CERB, because that means their jobs are not secure. We don't know if their client, right now, if they're getting CERB full-time jobs, that means they're not working. They might not have a job to go back to. So if they're on CERB, we tell them, don't buy a home right now, because we don't know what their situation is. Is it secure or not? So if they're connected to CERB right now, I would say, don't buy a home, because they won't get approved.
That's good to know.
Okay, well, that's very good to know. Yeah, exactly.
Yeah, it's just the same thing like getting unemployment. If you're getting unemployment, we don't usually look at unemployment income.
Yeah, it's not really an income, I guess.
Yeah.
No, you're getting income to support your family, but it's not income that we can use. CERB is the same thing. It's income, but we cannot use it.
It's not, I guess it could be cut off at any time, essentially.
Exactly.
So. Right,
You want a full-time job. If you're getting CERB, you want to make sure it's a full-time, that you have a job coming back to. We never know with CERB, are you going to go back to your job? Is it going to be closed by the time, bankruptcies, who knows? So we need something dependable.
So in terms of bankruptcy, so if somebody, let's say somebody's gone bankrupt. So what happens in terms of them being able to eventually buy a home? How does that work?
So it depends on different type of lenders that we have. So even if you're previously bankrupt, we still can help you out. Most lenders don't like it if you're bankrupt once, especially if you lost a home in the bankruptcy. So we need to know the story. For anybody who's previously bankrupt or on consumer proposal, we need to know the whole story. So it's not a yes or no. It's still possible, and I have done it easily.
Okay, good.
So what is exactly is consumer proposal?
Yeah, it's when you're making arrangement with your creditors that you pay X amount per dollar for a debt.
Gotcha.
And okay, so here's one. So what happens? So now you're approved. What happens if a home buyer makes a large purchase in between the time the home, in between they make an offer on a home, it gets accepted, then they're like, woohoo, I'm going to go buy like $30,000 worth of furniture or a new car.
Yeah, so
What
I
happens?
call it, I have a little slide I can show you. It's what I call the 10 commandments of not what to do when you're buying a home. 'Cause right now, if you do buy a home and you waive all your conditions and you're waiting to get your keys, the lenders have the right to cancel your mortgage or decline your mortgage if they see that you have a lot more debt. So don't change your jobs, don't put more debts, don't change your credit cards, don't buy furniture, don't do anything. Whatever you had going in for the pre-approval, come out with that before when you get your keys. Don't amend anything. Don't become self-employed when you have a guaranteed job. Don't co-sign for anybody. There's so many things. There's about what we call 10 commandments.
I read about don't deposit cash into your bank account. What does that mean?
Don't deposit cash.
Yeah. Does that make any sense? I was just reading. Yeah.
Depends what you're talking about. Anytime you put a lump of cash in your account, the lenders will want to find out where it's coming from. It
So
could
just
be that,
anything to disturb. Yeah.
yeah, and it could be that what you're using it for your down payment. It could be that you lent your friend $10,000 2 years ago. They finally paid it back. The lender will ask where the $10,000 came from. We want to see a paper trail. How do we know it's not? We don't know it's yours. We don't know if it's borrow funds and that you made an arrangement to pay them back so much per month. We do not like large sums deposits.
So wait till after you bought the house.
Don't breathe. You've been approved. So now you're approved. Just stop. Just stop.
So there's two parts for a pre-approval or pre-qualified. The main thing is you are pre-approved or pre-qualified, but the house has to be pre-approved and pre-qualified. We have to determine if the home is good. So there's two parts of getting pre-approved, you and the home.
So now are we talking about appraisals?
Appraisals, it could be, might be electrical issues, could be asbestos issues. It could be something happened in the home that we don't know or want to know, that you never know different things. We might have you pre-approved, then we find out that later on you have a criminal record. We don't know, we don't do that research because the clients will not tell us the details. They might have something that we don't know, and when the lenders will do research, they'll find that out.
Right. And with pre-approval, so Jerry, just say you pre-approve anyone here, they come, they chat with you, they give you all the information that you need, and you're like, okay, you're pre-approved up to 500,000, for example. And then just say we make an offer on a property and we miraculously are able to put conditions into this offer on based on financing. Sometimes pre-approval, and then when it comes down to the actual approval, the underwriting, it doesn't
match up.
And you're not actually approved.
Yeah, so it does happen, but if you have a good mortgage broker, we will verify all the documentation. I also call up my clients, I get a lender employment, I will call up my client's HR before my lender does, because I want to make sure what the HR will say. They might say, the client might say, here, lender employment says full-time, but when I call them up, they might say they're part-time, or they're full-time, but only with 30 hours per week, or some information. I want to verify everything.
Okay. Yeah, because there are things that slip through the cracks. I find just a story that I had with some first-time home buyers a few years ago. They were pre-approved and they made an offer on a property without conditions. And they said, it's fine, like we've got this, like we have the best credit ever. And when it came down to it, they didn't get approved and they had already purchased the home. They called me in a panic saying, Tara, they made a purchase on some kind of they had an American credit card, like at Bloomingdale's or something, that they just totally forgot about. Like they just didn't even realize it was still there. And it just totally derailed their approval.
Normally the lenders don't have access to American information, so that's a little surprising.
Yeah.
They have access to usually Canadian credit and Canadian Equifax, but US, I've never had that yet.
Yeah. So it was interesting. So it was like a real thing. And I mean, we were able to turn it around. We went to a different mortgage broker because they were originally dealing with the bank. And then we went to a mortgage broker who was able to figure it out and get creative, and they did, thank God. But like they uncovered, they turn all the stones over. Everything's, you have to be careful.
For myself, I used to work at a bank as an underwriter. I would have my own limits, so I was the detective for them, and I was the one who gave the last word. So I have a lot of experience reviewing paperwork to making sure there's no little surprises like this, because I did it for many years as an underwriter.
So if someone here were to approach you and say, you know, this is it, this is what I'm doing, this is the track I'm on, you can kind of guide them essentially into, maybe they're not ready yet, maybe it's another year or two down the road, but you can kind of give them the tools that they need to get to that next step.
Yeah, I've been working with some clients for about 4 or 5 years straight, helping them out with their situation. It could have been a bad divorce, debts, obligations, child support. So we work on a budget to determine what it is. The banks also, when we do a mortgage, we only look at what is legally obligated. When I do mortgages for my clients, I want to talk to my clients and find out about daycare. I want to find out about car insurance. Do they have big car insurance? Because they might be qualified for $500,000 because the bank says this is what they legally are obligated to pay. And the clients have a different budget. They might only have qualification for about $300 because they have a gym bills, they have kids in daycare. They might not qualify for it financially, but the bank says yes, because we only look at obligations, legal obligations, not your budget.
So when the bank says yes, does that mean yes? Like they're not
99%
looking
of the
into...
time, yes. If they do a very good due diligence, then a pre-approval is a pre-approval. Then we just have to look at the house portion.
Okay.
But you want to do proper due diligence. A lot of people are doing pre-approvals to the banks. The banks don't want to spend money verifying your documents because maybe about 20% of the clients buy a home, and they don't want to spend so much money with labor cost as somebody to doing pre-approval, verifying the documents, and 90% of them will never buy a home anyhow. They're just kicking tires.
Got you.
But I don't have a quota. I don't do it like that. Somebody comes in for a pre-approval, I will verify every single thing. So I will get an application and I will get the documentations. Without documents, I will not do a pre-approval because documents tell the truth.
Exactly.
People make mistakes especially if they're salary plus commission. They have a base salary. Those cause a lot of issues, and I want to verify what it is. I want to see a track record, 2 years. Are they getting the bonuses for the past 2 years? Or they just got one bonus this year and nothing next year?
So let's get into that. The self-employed commission type of buyer, they're half mixed salary and commission, or your straight up commission. How hard is that for them?
Like how are we going to buy a house? Come on, Jerry.
Real estate agents and mortgage brokers are a little bit more complicated. But say somebody in the retail store, they're selling whatever, and they're getting a base salary plus commission. We can look at it. Take a 2-year average of a history to get them qualified. It could be some different things. People are working overtime for many hours overtime, and we can use overtime to qualify them if it's consistent for over a couple of years.
So what if this year's basically, I'm just thinking current, and what if, because this year things have been different in terms of cutbacks and things like that. So you're taking the 2 years and just say last year was stellar, or 2 years ago was super amazing, and this year, not so much. You're still on, commission and
this year is very unique. But any other year, if you had a bad year, we take a 2-year average, and the most recent is lower. We take the lower of the two. So if you're making $50,000 in 2019, 2020, you're making $18,000, then I have to take the $18,000 as your income, and you won't qualify for anything.
So basically, like a lot of people during COVID have been very, very, very financially impacted. So this could be problematic.
Yeah, there's a lot of people who are self-employed and people who are commission-based. They are not working the same hours, so they're going to have a problem for maybe a year to 2 years to get qualified because now they're average. The lenders are also looking at different things. Because of COVID, it's unique. We want to see a track record, maybe 3 years track record. What happened? Tell us a story. Are you going back? And we might look at 1 or 2 months to see if their commissions are coming back.
Yeah, I'm just thinking for people who've had long-term jobs, like what if it's 10 years track record of like $100,000 a year, and then this year it's like 30.
Different lenders have different
rules. Go back
rules.
10 years? Yeah.
No, it's right now. This year is so unique. Normally it's a 2-year average, and the less of a 2 if it's gone down. But this year, the lenders they might be making some new rules coming up. They haven't created those rules yet because it's so new, this COVID.
Yeah, we're making it up as we go, just like learning from day to day, I guess, every day.
This year is more of a unique year, and we're going to see a lot of people who should have been approved are not going to be approved because of their lack of income or lower income, or not as stable income.
Right. So with prices obviously rising, the market is, the prices have just gone up so much since last year. It's a little bit unbelievable. What are ways, if people are trying to break into the market, they want to get their first home, but now the prices are kind of getting away from them. Can they get a cosigner? Can they get a gift? How can they, what other ways can they get into the market?
Yeah, for first
If they can't do
timers,
it on their
it's
own.
definitely more of a challenge than it ever has been for first time buyers. Yeah.
Yeah, so we can get co-signers. I have a lot of clients who are getting co-signers, guarantors, co-signers on the application so they can qualify. A lot of people depends if it's the down payment issue or if it's the income itself. So we look at a whole package to find out, can we get a co-signer? Maybe we can just arrange their debt to figure out how we can do it. Maybe we could put them on a budget. If they have a lot of credit card debt, maybe we can convert the credit cards into a loan and get a monthly payment. Now they can qualify more. So I look at all different things about my clients' files. It's not a one all fits all. I basically look at everything to determine what's the best way to go. Sometimes they have a nice car payment, but they have a big down payment, but they also have a car payment. So I might lower down their down payment, pay off the car. Now they can qualify.
Okay. Yeah.
There's so many different ways we can do it, but every file is different. So it's hard to give you a number or what we can do, but we could do a lot of things.
It sounds very positive though. And I think people need to hear that you're creative and you aren't just like fit into this box. And if you don't fit into this box, you can't get approved. You can kind of take everyone's situation, unique situation, I guess, and kind of suggest or budget or help, in different ways, which I think is so important to this market.
Yeah, I have a PowerPoint of 20 different types of mortgages that I do that people will say, wow, you can do all that kind of stuff. If anybody wants to learn what I do, I can give you some samples of what I can do and you'll be, wow. It's not just straightforward, guaranteed income. We can do everything. Unique stuff. If you have great income, but you're not showing it properly, there's so many more things we can do for self-employed. Unique stuff.
That's so great to hear. It's especially in this market. And so
like we were talking about one of our clients a couple of days ago, she's going through. Now she opened up the window so I can do a lot more stuff for her because she has more of an open mind.
I mean,
so
it went from 400,000 to
with that.
Yeah, it's incredible. Like how your suggestion changed her buying power from $400,000 to $700,000.
Yeah, that's all. If there's a will, somebody has an open mind, I can do a lot more than what they expect.
Okay.
And do you have any other nuggets for us, Jerry? Anything that we haven't discussed? Anything that you think that people should know?
I can take 2-3 days.
Especially our first timer.
Just remember
we're on the clock. Yeah, we're on the clock.
Exactly. No, every situation is unique. Every situation we have clients. I've seen so many new things this year that I've never seen, and I've been in the business for over 12 years, and I'm seeing stuff that I've never would have thought about. I would see now, and I can still get things done.
That's good to know.
Well, that's we enjoy that. That's good. It definitely works for our buyers, and
so that's pretty good. How much longer do you think that we're going to have these? I mean, these are historical low interest rates, right? So, like, what do you see? What do you see in the, let's say, in the next year or two happening?
Right now, the government is basically buying a lot of bonds, so they're keeping the fixed rates low. So we're expecting the rates to start to go up because the bond market is changing. But the economy is not in amazing shape. So the variable rates are going to remain the same for 2 or 3 years. The fixed rates are going to start going up because there's less money being put into the bond market. So variable remain the same, fixed going up a little bit, but not much. It's going to be quite stable.
By about a little bit, what are you saying? Like
right now we're at 40-year lows.
What does your crystal ball say, Jerry?
Pardon me?
What does your crystal
ball say?
If I had a crystal ball, I would be retired. we don't know. Even economists, if you ask 10 economists, you get 12 answers. So we don't know, but we know the rates are going to go up. It's expected to go up because the government is basically pumping this low rates. That's where we're getting, because it's been manipulated with the government. But if they start releasing it, not buying that many bonds, the prices are going to start going up. And we saw the rates are starting to go up this week. We're expecting maybe to go up another half point, maybe a point.
That's not very much.
No.
Okay, that's good.
Yeah.
Yeah. So let's get something inspiring. That's it's still a good time to buy, even though the prices have gone up. They're going to keep going up. So right
You
now,
can start,
you need to start looking into how you're going to purchase. And once you kind of hook up with Jerry and figure that out, then, you can come to us and we can, start taking you out and explaining the other things that will help you in terms of the land transfer tax. As a first-time home buyer, you're going to get a land transfer tax rebate of up to $4,000 if you qualify. There's a little bit of, an asterisk beside that. So we have to make sure that you do qualify, but there are other benefits too for first-time home buyers. So once you get pre-approved, we can move to the next stage and actually start taking you out and shopping and making sure that you're getting into homes that you're not, overpaying drastically because the market is a little wild. So we can give our guidance so we can help you with that. But I think first things first is talk to Jerry, find out how much you can spend, get your ducks in a row. It's so important. And always, feel free to contact us with any questions that you may have. Jerry is always available to answer your questions as well. So what we might do now is open it up to you guys and see if you have any questions for us.
In terms of financing, just one more thing I wanted to add, just in terms of getting your money in order. When you make an offer, don't forget, you're going to also, when you have an accepted offer, you're going to have to put a deposit down. And that deposit at this point would be a minimum of $5,000. So you have to have that ready to put down at the time that you have an accepted offer. So just remember that in your financing as well.
Yeah, so you're bringing up another point of closing costs that also occur in terms of once you're approved and you can start shopping that you have to budget for. So just say your home is $500,000, you budget about 1 to 2% of that cost towards lawyer fees, transfer. And then your deposit make with your offer. So that's money up front that you need saved to give right away once your offer has been accepted. Just say you need a minimum of $5,000. Anything above 1% of the purchase price would be ideal. But yes, there are extra costs involved too.
Right. Yeah, doing a pre-approval, you can get, if you have all the documents up front, I can get sometimes a pre-approval done in about an hour myself. I do a full review if it's an easy, straightforward deal or application. Sometimes it might take a little bit longer. It depends if I have to look and crunch a lot more numbers. If you're self-employed or a corporation, it takes longer. But typically I can figure out within a few minutes, looking at the documentation after an application is filled out to get you pre-approved. It doesn't take long. If the bank tells you 2 weeks, they're basically putting you on the back burner. But I can get it done sometimes in 1 hour, 2 hours.
That's great. And I know this is another thing. I already know the answer to this, Jerry, I think, but what is your, so a lot of home, when you're purchasing a home now, people want to see a letter of pre-approval. What do you think about that? Do you do that?
Some places won't let you submit an offer without one.
This year was the first year I have anybody asking for pre-approval letters. So this year is very unique. So depends on how much time we have with the clients gathering all the documentations. We can get some official from the lenders within time period. And if I do a review, I can get a letter that I can make my own letter that's comfortable because I've reviewed everything myself. We're just not going to hold the rate because a pre-approval is more of a rate hold than anything else. It's not guaranteed approval. It says, if you keep all this information correct, this is what we're willing to offer you. There's not 100% guarantee you will get the mortgage. So the main thing is we want to have everything prepared.
Okay. And how long do you typically hold the rates for, Jerry?
It's 120 days.
Okay.
And that's when you have to take possession of the home. It's usually 120 days. But if we see the rates going up, we contact the lender, the client, and saying, do you mind if we pull your credit bureau to update to lock in the rate? Depends on when was the last time we spoke to them. We can update the rates as many times as we want. Depends on the clients if they're still shopping or not.
Okay, great. I think that's great for us.
Yeah, maybe we'll
wealth of knowledge you are, Jerry. Thank you.
And maybe we'll just open it up to some questions.
Does anyone have any questions? You can just chat if you do, or
unmute your mic, and if not, well, we love seeing you, and we appreciate you coming.
But any questions at this point, we're happy to answer.
Oh, and the main thing is it doesn't cost anything to work with a mortgage broker.
We do not have a mic, but we have a couple of questions. Okay, so Jerry, it says here, I'm going to read it, Mom. Hello, we do not have a mic, but we have a couple of questions. The first, what is the ideal percentage for a down payment? Earlier, you mentioned to put down less than 20%, although that might lower the rate. What is the cost of that insurance from CMHC?
So it depends on how much you're putting down. If you're putting 5% down, we have basically look at insurance, depends on what the purchase price is. When I'm doing a pre-approval, I give you exact numbers because we want to make sure I don't want to give you a wrong number. For 300,000, it could be X amount. If you're transferring from one home to another one, we can transfer the CMHC insurance and do a top up if you already paid once. So that basically is a certain dollar value, which it's easier to give a fixed number when you're doing an application.
So let's say $400,000. Let's say somebody's buying a first-time home, $400,000, and they're putting 5% down. Approximately,
it could be around $10,000 that we add on to the mortgage. So it's added to the mortgage. It's not an extra cost. We add that to the mortgage.
Okay, so it's amortized over the whatever
over
25 years,
25 years or 15, depends what the client wants.
Okay, gotcha. Great.
Thanks,
Thanks,
Jesse.
Jesse. And yeah, anybody else got anything that they want to clarify or ask? It doesn't have to even be about financing. It could be anything about the buying process.
And if not, you can also reach out to us.
Personally and send us an email with your questions. So I think that is it. I don't see any more messages coming up. So I hope you guys, hi, what is the minimum credit score? Jerry, do you know? Oh,
that's a loaded question. The minimum credit score for most people around 660, 680 is excellent. Anything over 680 is good, but you want to pull a lot of people are looking at Equif, their own credit bureaus through one of these different programs. They are not accurate. They're just more of a beacon. We want to look at it as a mortgage broker. When I pull my credit scores for you, the numbers are different than what you get. Okay. So you might have a $700 credit score, but that's just more of information because when you pull your own bureau, it doesn't give you enough detail that I get. I get the real score. You might just get an approximate.
I think they're asking I think Yasmin is asking, what is the absolute minimum? Is there an absolute minimum that your credit score has to be?
Depends the situation. 660 is good. I have clients with 400 and 500 credit scores, but they have to put a bigger down payment. So even if it's a bad credit score, we still can get it done.
You just have to be more creative and might have to put some more money.
Exactly. So if you have a 500 credit score, you will not get a down payment of 5%. I might have to go 15%. Okay. But the average, I would say 680 is an amazing rate to get. And if you're over 680, no worries.
Okay. Over 680, no worries. Anything below 680, we're looking at being a little bit more creative.
Or we need to know
putting more money down.
It might be a small, unique situation that they overspent during Christmas time, they went over their limit, or they're too close to the limit. We can fix it up very fast. We need to know what is keeping the score down. Was it bankruptcy? Was it overspending? They didn't pay a bill on time. We need to know the story, and we might be able to fix that super fast.
Okay, great. Thanks, Yasmin, for your question.
And Jesse asked, Jerry, what is the best way to contact you? But we can certainly shoot out that information to.
Yeah,
you can add it to the chat bar, or I could do it myself.
Yeah, can you add it, Jerry? Because my keyboard's all the way up here.
Yeah, no problem. I'll just put my contact information.
Yep. Yeah, you really want to get it.
It's very simple.
Yes,
it's Jerry at YRent in Ottawa.
YRent, yeah, exactly.
YRentinOttawa.com.
Easy peasy.
Now, I've had a couple of people say to me that they talk to a mortgage broker and then they talk to their bank and they said their bank always gives them a better rate. How is that?
There's different options at the banks. Sometimes the banks are offering what we call a no-frills product. You're getting a better rate, but don't bother them for the next 5 years. You might not be able to do anything. You cannot refinance possibly. You cannot readjust your mortgage. This is here, take it and don't bother us. The only way sometimes to break your mortgage is if you sell the property. So you're having some debt, you might not be able to do anything about it because they lock you in, give you a better rate. So leave me alone type of mortgages.
So be careful what you're signing up
Yeah.
for.
I have those rates too. I don't offer them. I don't really like offering the no frills type of mortgages. So what they're doing is they're taking some features off the mortgage without telling you and giving you a better rate. I basically want to make sure you have a lot of options in case something happens in your life. We don't know what's going on, what's going to happen to us, health reasons, family reasons. You want to be able to readjust it. Maybe something breaks down in your home and I need $20,000 or $10,000 to renovate my roof or my basement. I want to finish my basement,
Right.
especially during COVID. A lot of people are renovating their homes right now because they need to work at home. If you went to the bank, possibly, then you have a mortgage that you can't do anything with it. Now you need money. The bank is going to say no. Now they have to go to a second lender and get a second mortgage paying maybe 9.5% on the mortgage because they took a no frills mortgage.
Okay,
boy.
so be
Okay.
very
A rate
careful.
is not,
Yeah.
a better rate might not be the best option. All the rates are very
Mm-hmm.
similar, but sometimes for 0.05 or maybe $25 a month, you might have a big problem because you took a lower rate because you lost all the flexibility for $25 a month. You don't know.
Because I think some people are just so, they just want the absolute lowest rate and they don't understand what the consequences of that.
There's a lot of consequences. So no two mortgages are alike, and there's so much competition. So banks are trying to offer better rates, but they're not telling you what they're losing by taking those features or losing those features. Here's a rate, but no one asks about what am I losing. They said, what's the best rate? And best rate has hurt so many of my clients before.
So should we be asking what our rate includes when we go to a broker or a bank?
It's always best to ask more questions. Yes.
Yeah, okay.
What
Thanks,
is
Nicole.
included, what's not included, and what can we do? Can we port it? Is it portable? Is it transferable? Is it assumable?
Yes.
If I need to readjust my mortgage, if I want to do anything, can I do anything? And am I forced to sell my home to get out of it?
Okay,
And what will my
That's
penalty
very
will be if I
important.
break my mortgage? So many things.
right. Very important. So guys, look,
Talk
be
to
very,
Jerry.
talk to Jerry, talk to, whoever. We're not saying that.
Hold on, I have a question here. What if one person has bad credit, but the other one has great credit? Going into pre-approval, how does
I see a question from Yasmin.
Yeah, so she's asking Jerry, what if there's a couple going into for pre-approval? One of the couple has bad credit, the other one has good credit. How does that affect everything?
And so how does that work in terms of
So
your?
every lender is a little bit different, so it depends on how they work. Sometimes if you have a really horrible credit, I take them out completely. Hopefully they're not the highest income earner.
Mhm.
Sometimes I use one person as a primary income earner and I look at the other one as a secondary. It depends on how bad the secondary is. If you have bad credit, really bad credit, consumer proposal, I might take you out completely. If you're just a small bad credit, just like 660, 650, 630, and the main one has 800, I can still do it with an A lender.
So you would say if it's not too much of an impact on the purchasing power, you're going to remove the person with the bad credit from the pre-approval.
Yep.
And
We
then
need to know
just
more.
focus on the person with the good credit and,
Mhm.
okay.
So there's a lot of different things we look at when we analyze a file to make sure everything is good. It could be that the credit is bad, but it's not horrible. There's a story to it.
Because what if the couple just say each make $50,000 a year? One has bad credit, one has good credit. You can't just take away the
The $50,000.
50,000. That's going to really
No,
hurt.
that's what we have to look at is like find out maybe there's something that's so minor, like I said, balances are too high that I might just have to readjust them by telling them what to do with the balances, spread it over different credit cards. That might be it. And they
And I
might have
also
to
think
wait
that-
1 month.
I think people are very hard on themselves. They might think that they just have the worst credit. And then when they go talk to you, they might be more
Yeah.
surprised
Yeah.
to find out that it's not that bad.
Yeah, so a lot of people might be late paying their bills, but if they're late paying the bills a whole cycle, that might hurt. If they're just late paying the bills 2 weeks late, 3 weeks late, and your next bill is not owing it, so they might have amazing credit and they might not know that. I can be late for 30 days or 25 days, and because who knows, I went on vacation, I forgot to pay my bill. But it has
Okay.
not gone to the next cycle yet. No one knows because you paid on time still. You pay late,
Okay,
you
that's
pay
good
more
to know.
interest to the bank, but you're still good.
So they may think that they're actually not doing well, but they're might be okay.
Yeah,
We have
if
another
you're not-
question.
Jerry, we have another question.
Yeah, so if you're not late a whole cycle, then you're okay, even if you're late a bit. You just pay interest.
Good to know. We have another question. Is there a minimum amount of time you have to be at a job to get approved? Like if I worked at one place for 2 years, but I'm leaving in the next couple of weeks for a different job, how long would I have to wait to get pre-approved? So this
Okay,
person is,
That's a great
Yeah.
question. Yep.
yeah,
So if you're working in a job doing the exact same job, but going to a different company, doing the exact same type of business, you've been there for 4 years, 2 years, and you're going to a new job and you're getting higher pay for the new job or better benefits, then even if you're on probation, I might still get you approved.
so can I ask Nicole then, if you are you going to do the same thing in the next job? So that
Yeah,
might,
if it's a complete, if they're going to government and then they're going to retail, then I would say no. If they're going to government, to one division of government, to another division of government, no problem. One construction company to another construction company, no problem. With most lenders. Some lenders, we want to see that you're not in probation.
okay, interesting. So yeah, she's specifically saying that it's going to be probably a different job, but better pay.
If it's something that she has no experience on, then I would say it's going to be more of a problem. If she already has the exact same experience, they might call it a different name a little bit.
Mhm.
Possibly a secretary to receptionist or something like that, then no problem.
So would that be essentially starting from scratch and having to build that 2 year, 1 year?
Yes.
2 years.
Most lenders want to see that you're at least out of probation.
Out of
Out of
probation?
probation.
Yeah, so it
Okay.
depends on the
Maybe like
probation.
6 months.
Some lenders are, jobs are 3 months, some are 6 months. So we have to get a letter of employment to confirm how long the probation is. And I
Okay.
need to know a history of where they worked before. So I always ask for a 3-year history of employment, and I
Mhm.
want to see what the contracts are.
Okay.
Like I said, I ask for more information to make sure that I'm not going to say no to somebody who they should be yes.
Okay. You're welcome. Great.
That's good.
Okay.
Those are good questions, guys.
Yeah, very good.
Yeah,
Yes.
absolutely.
Is that all from everyone? Is everyone good with their, we got, thanks, Yasmin. Awesome. Thank you for
Thank
joining.
you all for joining.
Yeah, I think we're good. I think Jerry, thanks so much for,
Oh, you're welcome.
yeah, thanks, guys. Thanks, Donna.
Yeah, if anybody needs to text me or email me, they can reach me. Just type in the Kayaking Mortgage Broker or Why Rent in Ottawa. They can find me, or just join me on Facebook, Twitter. They can find me everywhere.
Thanks,
Great.
Jesse. Appreciate that.
Thank you, Jesse.
Thanks. So Jerry, yeah, thanks so much for doing this with us.
you're
We
welcome.
really
Anytime.
appreciate you taking time out of this evening, and you guys for staying with us and learning. And we hope you guys got some helpful information. So, and of course you have Jerry's email and you have my, our email as well. So please
Feel free anytime.
anytime we're available
Yep.
for your questions.
And I just want to make sure
Okay.
that everybody knows that they don't have to pay a mortgage broker for giving advice.
Yes.
We don't
Real
charge.
estate
We don't
agents too.
charge.
Real estate agents too. We're free.
For buyers. Okay. Thanks, Jerry. Good night,
You're welcome.
everyone.
Have a good night.
Everyone, thank you.
Thanks for
Bye.
inviting me.
Wonderful.